James Hirechek with today's Auto Chartist stock index to watch for Wednesday, May 9th, 2012. The S&P 500 cash index, this is the contract we're looking at right now, and the E-mini S&P Futures contract are two indices to watch on Wednesday. The S&P 500 index is a cash index, and the E-mini S&P Futures contract is a smaller sized version of this cash index. Both are 100% correlated. This is important to know because according to our stock market research, we are looking for the futures contract to move in the direction of the cash contract. We're also taking a look at the markets using a top-down approach. What this means is that we are looking at the bigger picture first to give us direction and then trying to piece into the trade using a smaller or intraday time frame. Now, if we blow this chart up, we'll see that on May 4th, the S&P 500 index broke through the support line of a triangle chart pattern on the 1440-minute chart. Although this move is potentially bearish, you can see that the breakdown was through around the 1375 area and our target was 1310. The index ran into solid support slightly above a pair of bottoms near the 1357 area. This stopped the break and is temporarily holding the market in a tight range. This typically occurs when a market experiences oversold conditions. So despite efforts to establish another bottom near the 1365 area, the selling pressure may be too much to overcome, setting up this index for another attempt to break to the downside. And with the 1440-minute chart indicating downside pressure and a pretty good risk-reward opportunity, our technical analysis suggests that we look at the intraday futures chart for a clue as to when the market is likely to renew its sell-off. So now we want to take a look at the S&P E-mini contract, and this will give us an indication as to when or if this market is ready to move lower. If you recall, the bigger picture is pointing lower, so now we want to see if this intraday chart is also giving us a similar projection. Now the E-mini S&P 500 futures contract recently completed a downtrending resistance line and is in the process of creating an emerging descending triangle chart pattern. You can see this is a descending triangle pattern because we have a diagonal resistance top and we have a relatively flat bottom. Since the trend is down as indicated by the larger S&P 500 contract and our technical analysis is indicating a potential break as seen by this arrow, traders should look for a possible resumption of the downtrend in the direction of the cash market. So you can see already that this market has started to break to the downside after finding resistance. Now Auto Chartist is projecting a continuation trend change for this move, and this is because the initial trend was down and now our projected move is down, so this is why we have a continuation projection. At the same time, the 60-minute chart suggests that this market could break into support near 1344. Also, it indicates that a move through the 1360 area or this resistance line will negate the trade. So we do have a pretty good risk-reward ratio going on this intraday chart. And again, we are looking for an opportunity to trade in the direction of the main contract or the S&P cash contract. In summary, the S&P 500 is an index to watch because its 1440-minute chart is indicating weakness. At the same time, the 60-minute E-mini S&P futures contract is indicating a possible intraday top. The combination of these two scenarios makes these two markets the indices to watch on Wednesday. This has been James Hirechek with the Auto Chartist stock index to watch for Wednesday, May 9th.